Some of the biggest names in technology are down at least 40% so far this year, prompting the question, is now the time to get in? PayPal, Netflix, Meta, and Zoom are just some of the industry giants feeling the pain. Joining us right now is Dan Niles. He's the founder and senior portfolio manager at Satori Fund. And Dan, what do you think? Is this the time? I know you had some concerns before, but has there been enough pain to make you think, okay, these levels I would try?
Sure. I think it's a combination answer. So I think, number one, our big picture still remains. The S&P's down 20% at least peak to trough this year, and we're not there yet. The Fed hasn't started raising rates. They haven't started working down their balance sheet. And quite honestly, we haven't seen estimates come lower based on what's happened recently with the Russia escalation in the Ukraine. Having said that, I think if you are willing to trade around names as well as have shorts on to protect yourself to the ultimate downside, I think it's actually a pretty interesting time. I mean, this over the last 2 weeks on this latest move down in the market, we did in fact step into some of those names that are down 60 to 80% in the fintech space, for example, where we bought names like Square. We've got 4 different names in that space. We're taking a hard look at PayPal, for example, in the payments area. But don't forget, a lot of those names that are down a lot because they were pandemic beneficiaries, like PayPal, where you had online payments, or Zoom, where you had video conferencing, or in e-commerce. I mean, we saw what Stitch Fix had to say last night, where these names are getting crushed because they were up a lot based on the pandemic and people staying at home and Zooming and, sitting on their Peloton bikes and streaming things on Netflix. But each one of these is a little different. And so I think you have to go through them one by one. But yes, I do think you should start looking at the better names in the group that are gaining share, that are growing quickly, like in payments, for example, or online lending, and start picking away at that. We've also bought some solar related names over this last week as well, an electric vehicle, because we think, Europe said that they're going to try to get away from dependence on energy. It's going to be a lot of investment in that space. So we've started, rightly or wrongly, picking away at it, but you need shorts to protect yourself as you go and the market rips higher.
How do you short it? I mean, that's a complicated strategy and a little much for some retail investors.
Well, exactly. And I think it really comes down to what you're comfortable doing. So for us, we tweet about this a lot. We put in before, look, we think we're near the bottom. The notes we sent you last night, we said on there very clearly, we think the next 3 to 5% move is higher. And, for right now, at least in the futures, it looks like we're going to get a bit of a surge. But that's because you're sitting at oversold levels. Nickel was up over 60% in a day. The prior highest move was 20%. So from our perspective,
I'm glad you brought that up, though, Dan, because I was just thinking about nickel, too. I mean, before a retail investor gets into a position where they are saying, we're going to go long, but we'll protect ourselves by hedging with these shorts, remember what can happen to shorts. There's no limit to the amount of money you can lose in a situation like that. And with this volatility and seeing moves like nickel, which moved 250% in 2 days, you can lose everything. I would just think with this volatility, you have to be very careful before you start shorting anything.
Absolutely, Becky. I mean, our view is this. If you don't have the time to manage this or the stomach to deal with this on a day-to-day basis, be in cash. We've talked about this before. It's my favorite position for the retail investor, and we have a lot of it sitting in our fund. So that's the way.
What's your percentage in cash right now?
We have well over 25% sitting in cash. And so the way we handle it is we add shorts when the market gets to levels we think are too high. Then, we've tweeted about this before. We've got about 17 different metrics we look at that tell us when the market's getting oversold. So we cover those shorts, which raises the cash level. And then we have sort of a core group of longs that, we're always moving around depending on what's happening. Obviously, Russia changes a lot of things, and that's how we manage it. If you don't want to deal with all that, our view is down 20% at least in the S&P. Just stay in cash.
Shepard Smith here. Thanks for watching CNBC on YouTube.